Hey, welcome to my channel, Trade with Logic. Today we're starting something I've wanted to teach for a while, the foundation of everything we do in this channel. This is lesson 1, financial market. Before we touch any chart, before we talk about ICT concepts or entries, we need to understand the world we're actually trading in. Let's get into it. By the end of this lesson, here's what you're going to walk away with. You'll understand what a financial market actually is and why it even exists. You'll know the main types of markets out there because trading isn't just stocks, it's a whole world. You'll learn who you're really trading against, retail traders like us versus the big institutions. We'll also clear up something a lot of beginners mix up, the difference between investing and trading. And finally, you'll get familiar with the basic trading styles and how people actually make money in these markets. Sounds like a lot, but I promise, by the end, this is going to feel simple. Let me paint a picture for you. Imagine you walk into a giant marketplace, but instead of groceries or clothes or electronics, people here are trading something different. Money, stocks, currencies, gold. That is the financial market. It's not some mysterious, complicated machine. At its core, it's just people exchanging value, just like any other marketplace you've been to. The only difference is what's being traded. So let's break it down with something familiar. Think about a supermarket. You exchange your money for groceries. Simple. Now think about a car dealership. You exchange money for a vehicle. A financial market works exactly the same way, except instead of groceries or cars, you're exchanging money for stocks, currencies, gold, or other assets. Same concept, different products. Let's make this more specific. A financial market is an online venue, a digital space where people buy and sell financial assets. That includes company shares, currencies, gold, and even digital assets like crypto. You see all these here: stocks, Forex, gold, crypto, bonds, futures. Each one is its own little world, but they're all financial markets at the end of the day. Now here's a question most beginners never ask. Why does the financial market even exist? There are 3 real reasons. First, raising capital. Companies and governments need money to grow, to operate, to build things. The market lets them raise that money from people like us. Second, growing savings. If you just keep your money sitting in a bank account, it barely grows. The market gives you a way to put that money to work and grow your wealth over time. And third, speculation and profit. This is where we come in as traders. We use price movement, short-term or long-term, to generate active income. 3 different reasons, one single marketplace. Let's go through the main types you'll hear about constantly. The stock market, where you trade shares of companies like Apple or Tesla. The Forex market, where you trade currencies like Euro USD or USD JPY. This is where most of you watching are probably going to spend your time. The commodities market, physical goods like gold or oil. The crypto market, digital currencies like Bitcoin and Ethereum. The bond market, essentially debt, often from governments. And the derivatives market, contracts based on future prices like options and futures. You don't need to master all of these right now, just know they exist and know which one we're focusing on. This part is important, so really listen here. On one side, you have retail traders. That's regular individuals, people like you and me. We trade smaller personal accounts, usually from home. And we learn strategies like ICT or smart money concepts to try to understand what's happening. On the other side, you have institutions, hedge funds, banks, central banks. These guys trade with millions, sometimes billions of dollars in a single move. And here's the key thing to understand. Institutions don't just participate in the market, they often move it. Their volume creates the liquidity that we, as retail traders, actually trade into. Once you understand this relationship, a lot of price action starts to make a lot more sense. Now let's clear up a common confusion: investing versus trading. People use these words like they mean the same thing. They don't. An investor thinks in months, sometimes years. A trader thinks in minutes, sometimes weeks. An investor focuses on company fundamentals. Is this business actually good? Is it going to grow? A trader focuses on price action. Where is price likely to go right now, based on what the market is showing us? An investor might buy Apple stock and hold it for 5 years. A trader might buy and sell the same asset within a single day. Different mindset, different goal. Both can be profitable. They're just playing a completely different game. Within trading itself, there are different styles based on how long you hold a position. Scalping. This is seconds to minutes. You're capturing tiny price moves, very high frequency. It requires fast execution and serious discipline. Day trading. Minutes to hours. You open and close within the same day, so there's no overnight risk hanging over you. And swing trading. Days to weeks. You're riding bigger moves, and it requires a lot less screen time because you're working with the bigger picture of market structure. None of these is the right one. It depends on your personality, your schedule, and how much screen time you actually have. We'll talk more about finding your style in a future lesson. So how does anyone actually make money in these markets? The simplest way: buy low, sell high. You buy an asset cheap and sell it later at a higher price. There's also short selling, and this one surprises a lot of beginners. You can actually profit when the market drops by selling first and buying back lower. Some assets pay dividends, a portion of company profits paid directly to you. Bonds pay interest over time, kind of like a savings account. And then there's speculation, which is what most of what we do here is about. Trading short-term price movements using technical analysis. There's no single right way to make money in the market. There are several. We're going to focus on speculation because that's what gives us the most control and the fastest feedback. Now I want to slow down here because this slide matters more than almost anything else in this lesson. Every opportunity in the market comes with risk. That's not a flaw in the system, that's just how markets work. But here's what I need you to understand. Risk is not something to fear, it's something to understand and to manage. So what actually separates a real trader from someone who's just gambling? It's not luck. It's not being right all the time. In fact, you can be wrong more often than you're right and still be profitable. What actually matters is knowing how to limit your losses and protect your account. I want you to remember this one line. You don't need to be perfect, you just need to be smart with risk. That single idea is what separates real traders from gamblers, and we're going to go much deeper into exactly how to do that in a future lesson. And that's lesson 1 complete. You now understand what a financial market actually is, why it exists, who you're trading against, and the basic ways people make money in it. In the next lesson, we're going to go deeper into how price actually moves, because once you understand that, the charts are going to start making a lot more sense. If this helped you, do me a favor, hit like and subscribe so you don't miss lesson 2. And if you've got questions, drop them in the comments. I read every single one. See you in the next lesson.